All right, Money Mondays. We're talking about Money Mondays today. Well, today is Monday, so we do Money Mondays. We'll spend a few minutes before we get into all the cruise to talk about money because why not, right? We can't just come here and cruise and and those of you that come to the live shows, you know that you should never miss the live shows because of reasons like this, okay? So there's no segment where we don't cover something that's valuable with my cruise, but there's always some kind of lessons. If there's no lessons in it, I'm probably not talking about it, right? There's a ton of viral stuff out there that I avoid, particularly because I don't like I'm good, right? But right, like if you notice, I use this guy for the soundbite.
You doing what?
But I don't really cover his story because I'm like, what do I do with this? Right. So let's talk about the graph you're looking at is basically something that I've been experimenting with for 6 months. Okay. And I'm going to share with you how you can replicate it. Okay. This is purely for beginners. Okay. So if you're a sophisticated investor, you know this stuff in and out and stuff like that. I'm sorry, you might get a little bored here. Okay. But we're talking about the stock market. Basically stock exchanges and companies that are publicly traded in the United States. I'm sorry, in the United States. Okay, so but you can use this strategy if you're a beginner. It's a great way to get started, so you can start having your money work for you. Okay, so you can use it in any exchange, in any major national platform where the stock exchange and companies are being publicly traded. Companies, not bitcoins, not tokens, not like I'm not even talking real estate. Okay, I'm talking about stock exchange. Okay, but the example I'm going to give you is pretty much United States. Okay, so it will make sense to you. And what does it say? It says turn $25 to $13,000. Obviously, we don't do miracles here. We kind of do, but not the way you might be familiar with. Right. But so this method is very straightforward. It's called the dollar cost averaging, right? And if you're getting started, is the best way to get started. If you've never touched investment before, I would definitely tell you that you should at least do this for 1 year before you start looking at, before you start going crazy, or before people start selling you all kind of all kind of craziness in the name of you're about to flip money into more money. We don't do sogundogoji here, basically. Okay. All right. So this method, you can start it for as low as $25 a week. Okay, and you can start at any time. I don't do New Year's Revolution. Okay, I don't. As a matter of fact, if care is not taken, I might stop going to the crossover night thing. Well, it's kind of hard for me because I play the keyboard in church. But if it was up to me and it wasn't music, I definitely wouldn't do the crossover night thing that everybody is crazy about. The number one reason is because everybody else is doing it. That's actually the number one reason. There are other, much more other reasons. The second reason is my coconut head. The third reason is, you know what I mean? Because the reality is that there are principles that guide our world. Okay, and most people are just too lazy and they don't want to learn those principles, and then they're looking for miracles, and they use things like crossover night and New Year resolution and stuff like that. And the reality is that if you're on a path of success, you can literally start at any time. And there are a couple of things. There are a couple of simple. They just they seem too simple, right? So everybody's looking for some kind of drama. They're looking for some kind of dramatic thing, like a showdown before they can think it's a miracle there. No. There's miracle everywhere. You just have to pay attention, and some of them are very, very simple. So today let's talk about money miracles, right? Not to say miracle no they tire Jesus. So this, what you're looking at right here, is a 6 months experiment that I did with $25. 6 months experiment with $25. I'm actually going to play this short video. You can see it, see me logging in. Let me see here. There you go. Is that it? Let me take this out. There you go. Okay, let me play this short video. All right, there's nothing there. I'm just logging in on my phone into a platform called Public. Anybody can access Public. As a matter of fact, let me drop the link right now. Okay, I do have a link that you can access public with. They give you, once you have done up to $1,000, they give you $20 in stocks. They give me $20. Okay, so if you want to support me in that way, that's a good way to support me. You can see me logging in, and you can see me scrolling in through the screen on my phone. All right, but if you're in the United States, I'm not sure if you can access this anywhere else. Okay, but if you can't access this anywhere else, there's an app out there in your own local vicinity. And if you're following this strategy, you can't fail, you can't lose money. It's very hard to lose money. If you lose money, it simply means that what it usually means is that the whole nation is probably losing money. You're probably in the middle of a recession or something like that. So it is possible, but everybody is probably feeling the heat, and you're probably feeling the least heat, because people that try to do somersaulting and all kind of dramatic stuff, they're probably going to lose a lot more money if they don't have a strategy. Okay, so that's the link right there. Okay, yeah, if you lose money, it's because the market has crashed. Thank you for that, Marriott. Okay, so did you see me logging in? I logged in from my phone. It's if you go through that link, you'll be able to link to me, and basically it allows me to give you a $20 stock for free once you have deposited $1,000 or so, and that's 6 months worth of just $25 per week. Okay, and you can see me scrolling through it, right? And what you're looking at is basically as money is entering it. But the second one, the green line, is the performance. Okay, and you can see that it actually took just about 6 months for us to get into the positive side of things. Okay, and that's what you're looking for. Now, the problem with a lot of people is that they go jump through some strategy that somebody sold to them, or some people are even buying bots now. They will say they're buying a robot, right, that will help you trade. And just go and ask Daddy Freeze why he's not talking about forex trading anymore, and I'll wait. Just go and ask him why he's not talking about it anymore, and I'll wait. Okay. Anyway, so that's that. I wanted to show you that, but I'm going to go back to this again. This is the performance right here. Okay, over a 6 month period, 8.78%. And nothing special. Just put $25 into okay, the vehicles in particular are the exchange traded funds. They call them the ETFs. They're basically tracking. Go back upstairs, baby. Go back upstairs, baby. Go to mommy. All right. So I got interrupted there. I lost my train of thought. I'm back. All right, good. It's called the ETFs. Okay, basically tracking the major index funds. Okay, they call them the big three here. Some people call them the big three, but it's basically tracking some of the major companies, the most popular companies, the companies with the largest capitalization, market capitalization, meaning there's much more money behind it, right? And that's what you want. A lot of people will get into some kind of positions with some stock, some kind of assets, and it looks like it's taking off, but there's not a lot of money behind it. The same people, when they pull all their money, right, there's no volume behind it. You can probably potentially lose a lot of money. Okay, so it's very, very important that you note that. Okay, so again, the idea here is going to take you about 6 months before you see that you will cross into the positive. It might crash a little bit and then you start crawling up, and then it's supposed to get better over time. Now, if there's a market crash in general, you will see the effect. Why? Because the whole country is seeing the effect, right? And you're probably better off than most people. Okay, go and ask everybody that was playing Bitcoin 2-3 years ago. Okay, so that's that right there. And but when you're putting your money in, this is what it looks like. Let me show you. When you're putting your money in, where is this thing? Where is it? Interesting. I didn't have it here. Let me pull it up. Open file. All right. Then I'll tell you what. Okay. So again, what exactly am I buying? I'm buying the spiders. Okay. The spider is simply SPY. Just first, when you get on the platform, you search for SPY, it comes right up. It basically tracks the S&P 500, which is basically 500 of the most, highest large cap companies out there. And then also there's the Dow Jones 100. There's the top 100 companies also, again, with a lot of money behind them. And then the third one is, if you can help me type into the chat, that would be nice as well. And then if you, the third one is the Qs, like 4Qs, basically tracking some of the biggest technology companies out there, right? And then the fifth one, I just basically put, in this experiment, I just put $5 on each one of them. So the fourth one is essentially, I gotta think. Google, basically Google. It's GOOG, right? And anybody want to guess the fifth one? Anybody want to get, Mario, do you want to get the fifth, guess which one is the fifth one? So what you're looking at right now is basically the $25 going in there every week. Okay, you can also set it up to automatically pull it from your account. I don't do that because I like playing with it. It's an experiment, and if you do the automatic thing, they charge you an extra $1 for transaction fee. So I avoid that by setting my clock and just going in there and just observing it. And I wanted to be able to show something like this, and that's why I went through the process for 6 months to be able to show you that you too can put a little something and put something away and leverage the powers of the market. And you can see the performance here. Just all the money I put in over time, say 9.67 the past, but 8.67, right? So the market is doing about 9.67. My portfolio is doing about 8.67, which is like we're getting ready to match the market. And this is essentially, if you're in America, this is essentially you betting for America, not against America. You're basically saying America is going to continue to do well. That's all you're doing. Okay. Let me see. Anybody want to guess what nobody's guessing? Well, the fifth one is Apple, which is AAPL. Okay. These are essentially the two companies that I use the most in a lot of stuff that I do. Okay. Google and Apple, along with the top companies in the nation. All right. So now I want to share this with you really quickly. Last one I want to share with you is like a little progression of what this looks like over a period. Again, these are the same trick that I use in everything. Okay, not just in, I don't use this just in money, right? I use it in everything. If I'm going to get started with anything, I give myself 6 months, increments for at least 5 years. I'm doing the same thing with a Man of Prestige. Okay, Man of Prestige started October 21 to 2021, and we basically reassess things and change. We might tweak strategies every 6 months, but we're not stopping this for a minimum of 5 years. At 5 years, do you think I'm going to stop? It's probably almost impossible, right, to stop. But this is a progression of what this looks like. If you are, some of you might be able to, you want to take this seriously, you want to afford, I wouldn't advise you to do more than $1,000 on this per week. Okay, I just wouldn't advise it. Welcome, Priscilla. Good to see you. I wouldn't advise you doing this for more than $1,000. You might be making a lot of money, but if you have more than $1,000 to disposable to do, like I would say, talk to someone and employ a little bit more of a sophisticated way to invest your money. Okay, but I wouldn't do more than $1,000 with this. I'm just saying. Okay. But this is what it looks like. I'm not sure if it's clear, but I'm just going to read it to you. It's basically the first 3 rows is just $25 on 1, 5, and 10 years, based off of the number I showed you, which is the 8% growth, right? And then it's also comparing it against the alternative, which is to keep your money under your pillow, or it drops off, or you're spending it anyhow, or you don't even keep track of your money, right? But you know, the safest thing you can probably think of is probably what I call the UTP. So this is the ETF versus the UTP, under the pillow. If you keep cash under your pillow versus put this money, a lot of it will in the ETFs, in the ETFs that's tracking the major indices, right? You are going to always do better. Okay, why? Because your money, any money, see, I have $50 here sitting on my table here, right? This $50 is from, let me see, shout out to one of my brothers, brother Nee. He basically launched the book yesterday, gave me $50. I was at an event last night and he gave me this $50. Okay, so I have this $50 sitting here, right? So the goal is to get rid of this $50 as soon as possible. Okay, that's the goal. It's called dollar cost averaging. Okay, so what you're looking at is actually, if you did, there are 3 rows. There are 3 rows for what you decide to do. Let me show you what you're looking at. Okay, I needed to explain this. I meant to put a line between them, but I forgot. There is one 5 or 10 years for $25. Okay, if you were doing just $25 for the next 10 years every week, okay, that $25 will become basically, if you had it under your pillow, right, you will have cash $13,000 sitting in under your pillow. But the purchasing power of that $13,000 will be $12,599 from the average inflation rate of 2.65 over the last 10 years. So every time you keep this kind of cash in your pocket is losing value, like every second. Okay, so the purchasing power, as in like this, I don't know, purchasing power, that's English, right? The value of it is much less. Okay, in 10 years from now, and you can see that it's much less across the board, right? But if you did $50 every week, it's basically repeating the same thing. For $50 every week, for $100 every week, okay, for $250 every week, for each one of them, 1 year, 5 year, 10 year. Now, you're not supposed to master all of this on this episode, obviously. Just watch this segment again over and over to make sense out of it. But if you have any questions, use the comment section. You ask questions, and then we'll break it down even further. It gets better with time. But the point here is that there's about 1, 2, 3, 4, 5, 6 examples here. One example is if you were doing exactly what I did here, which is $25 a week. The second example is $50 a week, right, for the next 10 years. The third example is $100 a week for the next 10 years, right? The second one is $250, then $500, and $1,000. And I told you if it's more than $1,000 and you have that kind of money laying around, I would just make sure I employ more sophisticated ways. We'll talk to a professional so that, because you're overdoing yourself at that point in time. Okay, but again, the second column again represents how much you're investing in any given week for that period of time, right? And then the total investments basically had multiplying by the number of weeks, right? And then the fourth column is essentially dollar cost averaging on the ETFs. Okay, basically you're looking at $15,000. If you did it for 10 years, $25 over $15,000, right? The gain is about $2,400. That's your money has grown basically, right? In terms of value, because it's sitting in there, and you only do this with the amount of money that you know you're not going to pull out because you're broke tomorrow. Okay, so if you're going to, I like the idea, I'm going to go and put 500, and then 10 weeks from now, you're like broke, and then you go pull the money out. You destroy the whole point. Okay, all right. This is a minimum of 10 years. Okay, I'm just showing you the progression over 1, 5, 10 years. This only should be the kind of money you can put away every week. Okay. So the gain, you're looking at gain, and then under the pillow, you will lose basically some value of that money. For $1,300 in total, you will end up with the same value of $1,265. Just using for, I'm just using this for illustrative purposes only, based off of the last 10 years of inflation rate of 2.65. Okay, so the loss from inflation off of a $25 over a 1 year period is you've lost $35 in value, right? Anytime you hear that things are getting more expensive in the market, and yeah, basically that's your money losing value, right? Or anytime you hear that Naira is now $2,000. I don't know if that's where we're going with that, but you get the gist. Okay, now the actual net loss, also like adding all of the money you could have lost, and you can look at that all the way down. The extreme situation, let's say extreme here, you're doing $1,000 every week for the next 10 years. You're looking at about $500,000. Okay, that you put in $520,000, right? But the actual, if we go in that same progression, hypothetically, right, it's going to average out. There will be a recession, possibly, maybe once in the next 5 to 10 years, maybe 2 times, right? We don't know. The bottom line is that it's a curve. When you measure yourself against everybody else, most people probably lost a lot more money. Okay, so but you're basically trending with the market, because there's all kind of forces in your favor, including the president of the country, including the financial secretary, all these people, they want your money to keep growing. Essentially, you're leveraging. That's the whole idea of dollar cost averaging. Okay, and the value, if we're averaging that just hypothetically over the next 10 years, you're looking at about additional $97,000, okay, in value. on top of your money. And the flip side of it, if you are able, let's say you are just that disciplined, you are the weirdo, and you are very disciplined, and you can put $1,000 under your pillow for the next 10 years. Basically, that money, you've donated about $520,000 under that pillow for 10 years, but the value of it is $505,000. You've lost at least $14,000. Okay. And then when you had the fact that you could have had the money alternatively in the market, you've actually lost over $100,000 in total. Okay. So I wanted to share that with you really quickly. Again, you can see the thingy there. I wanted to share that with you for today's Money Mondays. All right. And then, again, processes, think about it. The point is this, okay? There are other forces that are working in your favor if you know how to leverage them, okay? You don't have to start all complicated. You can keep it simple. You can even do as low as $1 on the platform, okay? I don't know why you would want to do that, but if it gets too low, it gets retarded, okay? You don't want to do that, okay? But I'm just showing you an experiment of just $25. Have this thing, just take it away every week. That's $800+, okay? So in total, I've probably put like 600 plus, but it's now showing about $800. You do the math yourself. My math is probably not accurate right now, but the idea is you want to have large market cap forces behind your money, pushing it forward like that. And then also you are essentially reverse engineering consistency, commitment, okay, and discipline, which are essential ingredients if you want to do anything successfully in life. All right. If you have any questions, feel free to drop it. It will become additional content for us. We'll continue. Even if I don't know it, I'll go and learn it. I'll come back. I'll share what my insights are with you. Welcome, Nani. Welcome. All right. So let's do this. That's all I have for you today on the Money Monday segment. We're getting closer and closer to the cruise part of the show. Do me a favor, hit that like button, share, subscribe, and turn up your notifications. And I'll see you in about 20 seconds. It's your love that I've been missing. I miss all your hugs, your touching and kissing. Make love on the floor, the couch in the kitchen. One love enough, we done enough.